All right, good morning, everybody. This is Jack Gleason with Startuptrading.com. It is just past 9:20 New York time, Monday, June 1st, first trading day of the month, first day of the month. For our economic news, pretty light at 9:45. We're going to have final manufacturing PMI, and then at 10 a.m. ISM manufacturing PMI, construction spending, and ISM manufacturing prices. In the evening at 9:30, we're going to have current account for the Australian dollar, company-owned profits, and then in the overnight session, cash rate and the RBA rate statement at 1:30. Those are major economic news events for the evening. We'll start off here by looking at the S&P 500. I just want to back out and take a look at, there is this higher time frame daily extension here, guys, that is from a 2634 anchor. That is the high of the 27th of March. Its upside profit target was 3043, and that is the resistance level we've so far seen. Now, we've gotten and continue to get above those resistance levels, but really still, this is just such an important level moving forward. We'll just continue to be aware until we still start breaking out of it. Now, below us, and one of the levels I think it's possible we check into at some point this week, coming out of the lows, which was the second test of that higher time frame extension on May 14th, we had a rally. We ran into a 50% retracement. We blew through those profit targets. And we had an extension from 2863 half to high. Now that traded twice on Friday, and then we started blowing through those profit targets. That same anchor, new high, came to its 38% retracement on Wednesday, and that was really our support level. And then if I draw that to the new high, we never quite touched that 38 again. We never touched it again. So the levels I want to be aware of are, number one, and really just from a chart perspective, this 50% retracement of that extension lines up with the previous highs at 2965 half. That's incredibly important support level moving forward. And then the 38.2, which is 2988 quarter right now. Now, on the smaller time frame, I just want to see if we have held this halfway back. The lows of Friday to the highs of Friday technically pierce at the open. I'm gonna just be aware that it is mid-range, but right now going into the day in the S&P 500, we're just bounced off the top of the range and then bounced off the bottom of the range. There's really isn't a series here on the smaller time frame to draw up. Moving on to the Dow, backing out to that higher time frame. Also, the Dow extension sequence. Now, the Dow extension sequence is from 24,327, and those highs go back to April 16th. The 50% retracement was 25,061, and you can see I actually have it's a 4-hour leg start here. Should change this. It's a 4-hour, and it's actually an hourly leg start, but that was our exact low of Friday, was that 4-hour leg start. And then above us, we have that 4-hour leg start. I'm going to edit this up here. Change it. Excuse me. Change it to white, solid. And once again, we're kind of just in the middle of this range. And I don't really see much to do in the middle of this range here for the Dow. This to make the argument that we're holding this halfway back long, it's just pretty sloppy. Broke, tested, front run. I'm just kind of staying away from that and just focusing on that higher time frame support at 25,061 area. Moving on to the Nasdaq. Now the Nasdaq here is really the market. At least of the three I'm watching. I haven't looked at the rest. So that peaked above and has gotten back up. This leg start is at 95.87, and that's just what we've continued to run into. Now, the Nasdaq, unlike the other markets, had a traditional that traded Wednesday. The ES and YM had extensions. The Nasdaq pulled into its full 50% retracement from the 14th of May to high. Now, we pulled into that. We broke a 61.8. We had a 50% retracement long that same day that hit targets. We had another 50% retracement long that was front run on Friday. That has not hit targets, but we've broken above the opposing short, and the swing low from Friday to high I would consider to be a valid setup. You can see the reaction here so far. Now, we did come down to that 61, but I'd like to see us trade down into that 94.81 quarter. At this point in time, we'll have a swing mark from the overnight session on the hourly time frame. You also have a leg start just right above that. So if we can come down into this full 50% retracement at 94.81 for trade location into a potential long sequence, I'm really liking that as opposed to the other indexes. Moving on to oil, which took off like a rocket ship with SpaceX on Friday. We have this higher time frame extension on the daily chart in oil, and that goes, it begins its sequence, and that goes back to May 7th. 26.74 to high, give us a 50% retracement at 30.70. We had the retest on Thursday. Thursday's retest took us back to the top of the range. We broke out of our short sequences. We held a 50% retracement long on Friday, and then we basically went straight up. Now that we've completed those halfway back long profit targets, there is a couple variations of long setups. The first being the Friday low to high, and that would line up with this previous high that we have broken out from. Now, if we do not hold Friday's low to high, I would anticipate to come full halfway back from the low of the range inside of the extension from the 21st of May to high, and that would line up with really where that rally had begun. So I'm going to move up this green box, that 33.31. But as far as going into the day, 34.13 is the full 50% retracement from Friday's low. Moving on to USDJPY, there was this very large full 50% retracement long from the low of Wednesday, May 6th to the high of May 19th. Now, we pulled down into a front run of 4 pips on Friday. This front run of 4 pips traded once, twice, both front run by 4. That's a pretty aggressive front run, but 4 pips is a standard front run for daily. It's not like 11 or 15 or something crazy. 4 pips is pretty normal. To that 107.88, right into the end of the day, we spent our entire overnight session coming down back into the full 50% retracement long, and that paid attention to for a potential retest. We initially tested that level at 2 a.m. right at the European Open, retested, traded the 61, and our ups from this move are going to be a 108.08. Moving on to the Aussie dollar, which has had an incredibly powerful move. We've completed higher time frame profit targets here. What I will do is I will look at I need to back out here actually, because I believe we possibly have a daily extension from the high of 65.70 to high. There was previously, and I'll have to go back to probably like a 90-day hourly chart to show you this. There was previously an extension here, and you can only see it on hourly chart. I believe it was a 60.49 to high. It traded once to target. We had a same anchor new high come off our 38% retracement, and we have blown through those profit targets. So this is kind of one of those sneaky extensions that, unless you've been following this series, you're not going to know that it exists. And that would be that extension from 65.70 would line up with what would be just the low of last Wednesday to high. So I really like this trade setup because it's an extension, and you could argue that it's a traditional from the lows of Wednesday of last week. That gives us a 50% retracement at 66.70, but a 38.2 at 66.94. Those are going to be very significant support levels moving forward here, and I will actually mark that up with an alert. But that's a daily extension. It's a daily halfway back lining up together. Very important. Moving on to the euro, which is inside. So this dashed or dotted orange line is a daily swing mark, and this is a daily swing mark as well. We initially broke out of the 110.18 daily swing mark going back to Thursday, and then we spent, that entire 24 hours rotating to the top of the range to the next daily swing mark at this 111.46. That's currently the resistance level we are under. The high from 110.07 to high is our current extension. We've had one test, traded back to highs, and now we're back here at the bottom of the range. We are bullish above, line in the sand at 110.59 with an upside target of 111.76. Moving on to the GBPUSD, we had a 50% retracement from the lows of Wednesday to the high of Friday. It was a swing mark, leg start, retest, halfway back, double confirmation. That's on its way to profit targets. The profit targets are 124.37. Once that completes, we can look for our next measured move. You could make the argument of a full 50% retracement from Friday's low to high, but it would be better to take the trade after the completion. All right, moving on to the USDCAD, which is completed down here. It has completed what was the halfway back from the high of May 6th. There was a lot of anchors on May 6th to the low of the 19th. We traded our 50% retracement on the 22nd. We blew through targets on Tuesday of last week, and at that point in time, there was actually an extension that had begun from the low of the 22nd of May, or sorry, it's the 19th of May. We actually began an extension. Now that we've made a new low, this extension can absolutely come back into play here. And I will be conservative and just pay attention to where the 50% retracement is at a 137.68 off that extension. But higher time frame targets are lower. We're on a pretty massive trend line here. And we actually kind of bounced, you could call it like a front run of that trend line. Spent the morning rallying in the USDCAD, but we're going back to, we have higher time frame targets at 136.65. And then last but not least, we have our metals. The gold market is in its 50% retracement from Thursday's low to high. We had last week rollover Wednesday's low to Thursday's high, traded to its target 1753. Right now we have our next measured move, 1722 from the low of Thursday to high, has an upside target of 1770. And then silver, once again, pretty important here on the daily. We've broken out of this, call it a yearly trend line, or a trend line we've held for a year that goes all the way back to September of last year. We've gotten above that. That was basically our close. Silver gapped up here. And if you go down to the smaller time frame, even though this is drawn from the daily, there's the gap fill here in silver. And then let's just talk about some targets that have completed. We have completed a pretty major extension. The extension that was basically our consolidation from Monday the 18th, and then the 21st, the 22nd. The final test was last Wednesday. We're technically through that negative 23% profit target. And there is absolutely, this is the higher time frame sequence, which would go back to the high of the 20th to high. Okay, and that is what we've pierced, or I'm sorry, we've tagged the 61 there. We've about tagged the 61. You can see there was participation on the 50. We caught a bid. We came into that 61. It was a gap fill. It was a trend line. And there's still definitely some resistance at this 1889.5. That's these are daily resistance levels, but above 1889.5, I think we're going to start cruising in silver. Remind you to take a look at the weekly chart. That thing is prone to break out on a higher time frame. But that's going to wrap up my morning trade plan. I'll share my levels with every one of you guys in the room. If you enjoyed this content, please give this video a thumbs up. And let's have a good week trading, guys. Take care. There's still definitely some resistance in this 1889.5. That's it. These are daily resistance levels, but above 1889.5, I think we're going to start cruising in silver. Remind you to take a look at the weekly chart. That thing is prone to break out on a higher time frame. But that's going to wrap up my morning trade plan. I'll share my levels